going live here with Ryan Craver, Dennis. I don't know if you've been on with him before, but he's a retail expert and the senior vice president of emerging brands at digital at Lamour Group. And this guy knows the retail market better than anybody I know. We're going to bring in Ryan here on the fly. I hope we don't surprise him. This is the first time we've
Good
done with it.
morning, it's Ryan.
Hey Ryan, it's Joel Dennis. You are live on Benzinga's pre-market prep. How are you? Are you tired from all the shopping you did over the weekend, or are your fingers tired from doing it on your mobile device?
Definitely my fingers are more tired, but I think what's actually led me to be so tired is all the various reports as to whether last week was successful or not.
What are you hearing, Ryan, from the individual reports? Because we haven't really jumped into any. Like I've heard mixed results here as well. What are you hearing? Who really did well here over the course of Black Friday?
Yeah. Initial reports were that online was strong year over year, while the brick and mortar traffic was quite weak. I don't think any of that should be surprising to anyone because this is the trend that we've been seeing for years. It's just that this year it's been labeled that there was more online shopping than there was actual customers into the stores. Um, I think as smartphones continue to be put in people's hands each year and we get closer to 100% saturation, retailers continue to improve what they've got online, we're going to continue to see this type of increase. In total, what we saw was Thanksgiving was up about 25% online versus last year. And then that ate a bit into Black Friday, so it was only up about 14% online last year. And I think that total number that came from Adobe was about 19% up year over year. The guys that were doing really, really well are the retailers that have fantastic mobile and desktop site offerings that also allow in-store. And names like Kohl's and Nordstrom are probably the big leaders within online. Additionally, what I saw was a huge 4 days of cyber shopping for Amazon. And even Google Shopping did well. And Amazon not only publicly announced that they did really well, but our brands that we sell on Amazon all were up significantly year over year. So it definitely was a very good week for Amazon.
But despite all this good commentary from Amazon, stock's not up very much. I mean, on Black Friday, it actually came off the highs and went down. It's only up $1 here this morning. Are you using this opportunity as a buying opportunity for Amazon here, or do you think this is just a run that may be overdone?
I think a lot of it's already been built into the stock.
Okay.
Everyone, I think, anticipates well before Black Friday how big it's going to be. I think we may see it trade sideways a bit. They may pop after they announce, the millions and millions of products that they sold in a very eloquent way in which they do it. The big news I saw from Amazon outside of sales over the weekend was the released videos around the drone. So they recently signed Jeremy Clarkson from Top Gear in the UK, and he came out with a little video about what their drone's going to look like. So a little bit of marketing buzz, somewhat believable, but I think we're far from drones actually happening. With that said, I think going into the holidays, Amazon is the best primed, no pun intended, for the most shopping dollars. And I know that the vendors are funding a lot of promotions, things like one-day shipping and other things. So we should see some pretty favorable results from them.
Ryan, couple retail stocks coming from the chat. Bobby Bid wants to know about Walmart here. So do I. What are your thoughts here on Walmart, WMT, as it's kind of just been consolidating for the last few days around the $60 area? Is this a consolidation here where the stock could eventually move higher here again? Is all the bad news out in Walmart, or we expect more bad news here on the horizon?
I think a lot of the bad news is already out. I mean, they know that they've got this significant challenge in Amazon. They are investing very heavily within e-commerce, even though it's a less profitable channel. A lot of the bad news or impact to earnings on the minimum wage issues across their various states within the U.S. is priced in. So I think that this has got to be a bottom. Right here is where they're paying the healthy dividend, and They are, you can't fight the size, the breadth, and what they're capable of. One question that I think they still have not answered is what they're going to do internationally. They've essentially reached saturation in the U.S. and they haven't done that well internationally, aside from Asda in the UK. So I think they need to answer that question, but a lot of negativity built into the stock. I think it's a bottom.
All right, let's go a little bit from the lower end to the higher end here. Tiffany's not the greatest report last week, but they just bought this thing up anyways. What are you hearing about Tiffany's? And then we'll go into Coach after that.
Tiffany is still an amazing brand, and the equity that they've got in the brand is fantastic. I still feel as if there's going to be some currency headwinds they're going to obviously face. They did very well in Japan. With that said, I'm probably more of a wait-and-see guy at this point. To me, they do trade at a premium that's not necessarily justified by the growth rates that they have. So I'd probably wait on the sidelines.
Okay, what about Coach? It's kind of staying in that little bit lower end than Tiffany, but Coach, C-O-H.
Coach, I put it in the same box as a Michael Kors. While Michael Kors and Coach drive a lot of their sales within department stores and some of their own stores, I think that they've got some growth to figure out. They've reached a lot of saturation, and department stores aren't driving a lot of sales. Actually, they've been losing a lot of sales over the past couple decades. It's just been a shift of pie share as opposed to increasing the pie. So again, Coach, I'd stay on the sidelines.
Marvick in the chat wants to know about GPS, the Gap. We've been talking about it on the show for a while. I'm not a big fan of this store. It did get a pop, though, last week, finally. A little bit of short covering, maybe from 25 up to 28. Pulled back on Black Friday down to 27.36. Thoughts on the Gap going forward? Does this company need to reinvent themselves here? Or is this a pullback or a buying opportunity? What are your thoughts on the Gap?
Gap, the only positive they've had has been a breather that came last week, mainly because everyone's been so bearish in retail for so long. I'm not a believer in it. I think they've also lost some pretty significant management, specifically from the Old Navy president moving over to Ralph Lauren, and that was one of the few good stories they had. They've got a lot of trouble with Banana Republic. They've got trouble with their current stores. Their online offering isn't that strong. I'd stay away.
All right.
Under Armour, David B wants to know about it from the chat. We talked about it a little bit earlier. We did mention that Piper Jaffray did cut their price target on it today from $97 down to $88. They also cut their EPS estimate there. What are your thoughts on Under Armour? It's trading around about $2.50 in the pre-market.
Under Armour, I'm a long-term believer in. I think relative to the giants like Nike, who have said by 2020 they'll have $50 billion in sales, they're only at 3 or so. I'm a believer in them. I think it's a hot category with athleisure. I think this is a buying opportunity. This and probably Costco are probably the two big ones that I believe in right now.
All right, for a while, everyone's been looking for the death of Best Buy here. Some good, actually, I think, who was it? Was it Luke or someone on the desk said that one of the Best Buys in the local area had a great turnout here, one of the best in the state. Not the greatest earnings report last week. 32 seems to be like a major hurdle. What's your thought on Best Buy?
Best Buy, they've definitely been very loud over the past 3-4 cyber days. I am a believer in their new format stores, the smaller stores with much smaller footprints, and they're using the vendors to drive store-in shop concepts. With that said, they're still in a category that is very, very hard to defend against online. I put them in the same bucket as those like GameStop, where a lot of the media and the content is now being downloaded online. And I don't know how they're going to fight that trend, specifically for games for like Xbox and others. So I'm not a big believer long term. I think they're going to eventually have to go back to closing some additional stores and shrinking their current footprint. I don't think that's happening immediately, but it's going to happen eventually.
Now, you wouldn't think people would buy certified diamonds online, but Blue Nile here, taking a look at that chart, major resistance I see here at 37.64 here, double top exactly. Any thoughts on Blue Nile?
Blue Nile, I don't know a ton about. With that said, just looking at the chart, it's definitely going through some pains. I know that their customer acquisition is extremely high relative to some of the other e-commerce players. I can't see how they're going to be a best performing leader within this space. I think eventually Amazon comes into their space and eats up some of their market share.
Ryan, I don't know if I talked with you about this. I know you were on a couple weeks ago, and we'll just see how it's playing out here. Lower mall traffic, a lot of these big boxes, these Nordstroms, your Macy's, I think they're going to be asking for either lower rent. They already are closing some stores. I mean, is the destination, the trip of going to malls still going to be the predominant thing where it's not going to hurt some of these big REITs like Tom and Company? Or eventually is, the shift to not only online but mobile going to take its toll on some of these big mall REITs?
I definitely think it will. I think we're early days in this right now. I think already we've got way too much retail space out there. You started to see the amount of new retail space that's being developed already drop to about flat to slightly up. I think longer term, it's not good for big box retailers that aren't in the consumable goods space, meaning grocery and things like that, because I think delivery is going to be huge. I think online is going to be huge, and I think the guys like Nordstrom and Macy's and Kohl's, they're going to turn more into fulfillment houses than they are shopping destinations. I think shopping will always remain a leisure activity, but I think it's going to be more purpose shoppers who go in and out very quickly, and they're heavily influenced by mobile. So long term, I'm not a big fan of the retail REITs.
Ryan, we got a couple of retailers going to report earnings here this week. SF Bright wants to know about PVH. On Wednesday night, they're going to report their earnings. What are your thoughts on PVH Corp?
PVH, I think it is it's a fantastic company with amazing breadth, given the brands that they've got. With that said, all the tea leaves point to a struggle in terms of forward guidance. They are heavily into the department stores and the big box retailers. We've heard very consistently from all the big box retailers that they're struggling. So I would probably wait and see. I wouldn't play this one.
Another stock that's going to report on Friday, Big Lots, BIG. We haven't talked about on the show for a while. Stock's been holding up quite well. It's found some resistance in this $48 area last few days. That was the resistance back in October as well. What are your thoughts on Big Lots?
I like Big Lots. For Big Lots specifically, the last couple of days are not big days for them. They tend to do a majority of their holiday shopping or see a majority of their holiday traffic closer to Christmas and into those holidays in the back half of December. So I think, to your point, they have held up quite well, and their big time should come in a couple weeks' time. So I think they look good.
Ryan, we're on the line with Ryan Craver, retail expert and senior VP of emerging brands at digital at Lamour Group. Ryan, what's the hot toy this year? You've over the past, you've dating myself here with Cabbage Patch dolls or
Joel, really dating yourself.
GoPro cameras. I mean, is it just like the consumer electronics? Is that what the young kids are looking for these days?
Yeah, the hot toys are more like big boy and big girl toys. They are iPhones, they're GoPros. I think if you look specifically within the toys category, Lego is a massive winner this year. Not only are they doing Legos in Star Wars that have been successful, but they're also doing them in a variety of different ways. But they have come up very, very big. And then, like you said, it's consumer electronics, video games. That's where we tend to see a majority of the spend this early in the season, and it looks like it's panned out thus far.
Ryan, you brought up Star Wars and you brought up Disney here. I know this really doesn't fall in, the entire retail category, but boy, it got up to 120. That had some bad news about subscriber declines in ESPN. But another thing that's kind of buzzing on the street is that are people just kind of saturated with the Star Wars and all the stuff? I think it was Brian Sazi had pictures of some of the Star Wars displays at some of the big outlets and the big malls, and it looked like they hadn't been touched. Is that are we finally saturated? I know Dennis is not with the Star Wars stuff, but
I go, yeah.
what's your take? I mean, is Star Wars going to be the boon to Disney that everyone's looking for?
Yeah, it's a good question. I did see that stuff from Brian over the weekend. Man, did that guy have a run over the past 4 or 5 days? I think that Disney's interesting. I think that they've definitely got the best portfolio of brands and content of any company that I can think of. With that said, I think that Bob Iger has come out and basically said that he doesn't see any big impact from cord cutting. We're now starting to see that's not entirely true. I think they're going to need to decouple ESPN from cable in some way, and they're going to need to offer it through services like Amazon Prime eventually, as well as Roku and some of the other streaming boxes. With that said, Star Wars, I think it's had negativity thus far, but I think a lot of that's coming down to the fact that they're building up the anticipation. The movie doesn't even release until December 18th. And what I think you're going to see is as we get closer to that December 18th release, you're going to start to see some of that pent-up demand translate into actual dollars purchased as people get more and more excited and it's in their face. Also, I think post-holiday, when you start to see everyone take their gift cards that they earned through Christmas and through the holidays, you're going to see a lot of that pent-up demand again come through. But I think it's just interesting how they released the movie so late into the holiday season. I think that they would have probably seen more accessory sales, video game sales, if they brought it in a bit further.
We've been on the line with Ryan Craver. He's a retail expert and senior vice president of emerging brands and digital at Lamour Group. Ryan, great take on the retail sector. We might sneak you on one more time during Christmas week, maybe for a shorter segment, and get your take. But we really appreciate you looking at these stocks for us, and we'll keep an eye on some of the ones you mentioned.
Fantastic. Have a great Cyber Monday, guys.
Thanks, Ryan.